So, good afternoon and welcome to today's class. This is advanced financial reporting and analysis. So we now continue from where we left in our previous class. I did on what we call the accounting for banks. So today I want to do on what we call the company reconstruction. And do on what we call the company reconstruction. We do on what we call the company reconstruction. Do company reconstruction. We do company reconstruction. We do on what we call the company reconstruction. So we're doing the company reconstruction. Now, when we talk of company reconstruction is whereby you are reorganizing the capital structure of the company. And this generally includes reducing the claims of the shareholders and the debenture holders. Now, what happens in company reconstruction is where the company probably has been operating with accumulated losses. Yani imekuwa ikimake losses. Sawa sawa. So for you to better that given company, you can do what we call a company reorganization or the company reconstruction. Now, company reconstruction can be done in two ways. There is what we call the internal reconstruction, and there is what we call the external reconstruction. Internal reconstruction is whereby you will reorganize the capital structure of the company without liquidating that company. So now then the external reconstruction is where now the company will be taken over by another company. It may be a new or existing what? Existing company. That is what we mean when we talk about the company reconstruction. Now, we'll begin with on the part of what we call the internal reconstruction. Now, internal reconstruction is where now the shareholders themselves or the creditors, the debenture holders are making sacrifice to help the company to meet the accumulated loss. Sawa. What we mean is in this case, they may reduce their what? Share capital. Sawa. The debtors, they may also reduce their debts. The creditors, they may convert some of their amounts into ordinary shares in order to help the organization to meet their what? Their accumulated losses. In order to help the organization to meet their accumulated losses. Now, write and say, can begin and you say, And begin by saying that the company reconstruction refers to company reconstruction refers to the reorganization. Company reconstruction refers to the reorganization of the capital structure of the company. Reorganization of the capital structure of the company. Reorganization of capital structure of the company. Including reducing the claims of both the shareholders, including reducing the claims of both the shareholders, reducing the claims of both the shareholders, and the debenture holders, See, such arrangements are necessary. Such arrangements are necessary, especially when the company is operating, has been operating at losses, for a longer period of time, has been operating on losses for a longer period of time. So it is usually carried out. By when the company is facing financial difficulties. When the company is facing financial difficulties. Now, types of reconstruction. Now, you write and you say, a company can be reconstructed in the following two ways. Company can be reconstructed in the following two ways. But one is what we call in the internal reconstruction. And number two is the external reconstruction. Internal reconstruction, and number two is what we call the external reconstruction. Now, the internal reconstruction, we call it the capital reduction scheme. Now, why do I call it the capital, or why do we call it the capital reduction scheme? The shareholders of the company will be sacrificing by reducing their capital. And that is why in this case, we'll be talking of it as a capital reduction scheme, because now the shareholders are the ones that will make that sacrifice to help the company to meet the financial difficulties, or generally the losses. So begin with this internal reconstruction. And begin with the internal reconstruction. You also call it the capital reduction scheme. And also call it the capital reduction scheme. See, this involves making the necessary changes. making the necessary changes on the capital of the company, on the capital of the company, making the necessary changes on the capital of the company without liquidation, without liquidation, making the necessary changes without liquidation, without liquidation. You add and you say, it is a scheme where efforts are made, the scheme where efforts are made to bail out the company. Efforts are made to bail out the company from losses, to bail out the company from losses, and put it into a profitable position. Bail out the company from losses and put it into a profitable position. And put it into a profitable position. Profitable position. Say, it is a scheme where the shareholders, debenture holders, and creditors, the scheme where the shareholders, debenture holders, and the creditors sacrifice their claims, and the creditors sacrifice their claims, in order to enable the company, write off the accumulated losses, in order to enable the company write off the accumulated losses, in order to enable the company write off the accumulated losses, the accumulated losses. Now let's talk about the situations which call for internal reconstructions. Situations which call for internal reconstruction. Situations which call for internal reconstruction. Number one, say when the company, or when there are huge accumulated losses, and there are huge accumulated losses, there are huge accumulated losses. Number two, when part of the capital, when part of the capital is not represented by, when part of the capital is not represented by the available intangible assets, by the available intangible assets, by the available intangible assets. But three, when a change is required on face value of the shares, when a change is required on the face value of the shares, so that they become attractive to future investors, so that they become attractive to future investors, so that they become attractive to future investors, so that they become attractive to future investors. Future investors. Now, accounts to prepare or prepared. Accounts prepared. Now, the accounts prepared, number one will be what we call the capital reduction account. Capital reduction account. Now, basically, here we'll be applying what we call the double entry. So, the double entry systems. So, now, accumulated losses, we know those are losses. No. So, if you write it off as a loss on the accumulated loss account, which is generally the retained earnings, unafaa kufanyia nini? Credit the accumulated loss account, then you will debit the capital reduction. Si ni kweli? You obvious kama iko kwa retained earnings, ikiwa loss is on the debit side of the retained earnings. So no, we eliminate, you have to credit the retained earnings, then I debit the capital reduction. So that is why accumulated losses will also have it here, loss. I'll debit it there. So you also have the goodwill written off. How do we write off goodwill? We'll credit the goodwill account, meaning that I'll debit where? Capital reduction. So goodwill write off. Goodwill written off. So now we also will also be having the revaluations. So are we together? Now, if you revalue an asset upwards, on the asset account, you're supposed to do what? Debit the asset account, you will credit the capital reduction. This will be the revaluation gain. So meaning, what about the revaluation loss? I'll do what? Revaluation loss. I will debit. Let's also go to the ordinary share capital. If you reduce the ordinary share capital, on the ordinary share capital account, how do we do that? We'll debit the ordinary share capital. I will credit the capital reduction. So ordinary shares. Same case with premium, the share premium. Also do the same. And what else there? If also we have the reserves, also do the same in that case. In most of the cases, the capital reduction has to balance. Kosa kubalance hiyo tunaitanga the what? A capital reserve, which in this case, it should be the goodwill. Second account that will also maintain is what? Ordinary share capital. Ordinary share capital account. In ordinary share capital account, it'll just be having the balance brought down here. If there is any issue of shares, so issue of shares, it may be the shares that they have issued, the rights issues. Ama niandike tu rights issue pia. You know what's a rights issue? This is where you issue shares at a price that is slightly below the bar value. And this is to the existing shareholders. To the existing shareholders. Then if there is any capital reduced, capital reduction, we'll have it there. So you balance, what we get here is a balance carried out. Balance carried down. So that is how the accounts that we maintain in these accounts. So let's talk over the journal entries. and talk of the journal entries. Journal entries. Journal entries. Number one, you can begin with a reduction in var value. With a reduction in var value. Now you are reducing the share capital. With a reduction in var value, as I've said, you debit the ordinary share capital account. Capital account. You will credit the capital reduction account. Capital reduction account. Credit the capital reduction account. But with the reduction in liability value, with reduction, this is in liability value. The reduction in liability value will debit will be able to debit the liability account. Then we credit the capital reduction account. Credit the capital reduction account. The other one is with accumulated losses written off. With accumulated losses written off, you will debit the capital reduction, then credit the retained earnings. Credit the retained earnings. Now, as it is with the reduction in asset value, with a reduction in asset value, with a reduction in asset value. The reduction in asset value, you debit the capital reduction. You will credit the asset account. The asset account. The other one is with the increase in asset value. With the increase in asset value, debit the asset account, credit the capital reduction account. Credit the capital reduction account. Credit the capital reduction account. Capital reduction account. That one is with the reconstruction cost. With the reconstruction cost. With the reconstruction cost, you will debit the capital reduction. Capital reduction. Now that it has to be paid through cash or bank. So you credit the cash or bank account. That one is with the issue. With the issue of shares. With the issue of shares. You issue shares, we know we receive cash. No. So you debit the cash or bank account. Then you credit what? The ordinary shares, because it will increase the ordinary shares, shares account. can also, if they issue at a premium, you credit the share premium what? Share premium account. Also credit the share premium account. Also credit the share premium account. So we can have an example. Begin with the November 2015. Do November 2015. November 2015, question number 2B. November 2015. November 2015. Question number 2B. November 2015. Question 2B. 2B. Now, Trouble Limited is a private company. 3/4 of the issued share capital of the company are held by the directors and the members of the immediate family. Company draft statement of financial position as of 31st December 2014 was as follows. Given there the non-current assets where we have the intangible assets, development costs, we have the goodwill, tangible assets, we've been given the building and the plant and machinery. Then we have the current account where the current assets where we have inventories, trade receivables, current liabilities, we have the trade payable, bank loans and other overdrafts. Then we have the net assets. Equity, we have the ordinary share capital of shillings 10, share premium, and then we have the accumulated losses. And then the net equity. Bank loans and overdraft consist of 10%. Loan of 400 million carrying a fixed charge on the company's building and an unsecured overdraft of 287 million. Demand for the company products has fallen drastically in the recent years, owing to the importation of high quality and cheaper alternative products from the Southeast Asia. Development costs appearing in the statement of financial position relate to a new product that has been perfected to a marketable stage, which there is believed to have a strong demand. These costs have been properly capitalized in accordance with the provisions of IAS 38, intangible assets. Company is in urgent need of capital to meet the existing liabilities and necessary new investment in plant and working capital. Even there, a scheme of reorganizations has been drawn up for the consideration by the shareholders and creditors. The items of these schemes are as follows. Number one, the shares of shillings 10 Each are to be written down to shillings 2 per share, and subsequently, every 5 shares of shillings 2 will be consolidated into one fully paid share of shillings 10. Existing shareholders are to subscribe for a rights issue of shillings of 2 new shillings 10 ordinary shares at a value for every share held after the proposed reduction and consolidation. A major supplier agrees to exchange a debt of 180 million included in the trade payable for 18 million ordinary shares of shillings 10 for value. In full satisfaction of 687 million owing to the bank agrees to accept an immediate payment of 87 million and consolidate the balance of 600 million into a loan carrying an interest rate of 13% per annum, payable in 5 equal annual installments, commencing 31st December 2016. The loan is to be secured by a fixed charge on the building and a floating charge on the company's remaining assets. Credit balance on the share premium account and accumulated losses and goodwill considered valueless and are to be written off. The assets listed below are to be restated to the following amounts. We have the plant and machinery inventories, trade receivable, buildings. A group of dissatisfied shareholders plan to oppose the scheme because they feel they have borne an inordinate burden of the reorganization, whereas bank has lost nothing. Company has received a cash offer of 1120 million with non-current assets and current assets. You are required revised statement of financial position of Tabu Limited as at 1st January 2015 after conclusions of the proposed scheme of reorganization. But with a report to the group of dissatisfied shareholders advising on whether you should accept or reject the scheme of what? Reorganization. That is the question. So there are only 2 questions there. But however, the examiner may ask you 3 things in regards to question on what we call the internal reconstruction. First is to prepare what we call the capital reduction account. Number 2, it will be on what we call the journal entries. And number 3 will be the revised statement of financial position. Number 4 is just in case of this, like this one where you are required to advise the shareholders. Ni sawa. Yangu nitaanza tu hivi zote. I'll do everything. Sawa. But in this case, now that you are required, the only statement of financial position and that one, I show how you supposed to do that. Capital. Let me begin with the capital reduction. I'll have the capital reduction account, and I will also need to have the ordinary share capital. And because I've said we need to also do the journal entries, let me also have my journal entries here. The journal entries, shillings are in thousands, right? Shillings are in thousands. Shillings are in thousands. So we'll just have, I can have the journal entries. See, how we prepare the journal entries. The journal entry will have the debit side. This will be the credit side. Shillings in thousands. I will have the shillings in thousands. So we go to the balance for ordinary share capital, because already we know them. From the equity, what is the balance for ordinary share capital? 800,000. Let's now continue. Now we were given on number 1 now. The shares of shillings 10. Wapa? So zilikuwa shillings 10. Sawa. They have been reduced to how many shillings? 2 shillings. Sawa. So ni kumaanisha per share reduce each by how much? Ni 8 bob. Sawa. So the thing is here, first I need to know the number of shares, which we know the ordinary share capital is 800,000. I will divide by the bar value. No. So this will be how much? 80,000. So what will be the capital reduced here? I've reduced my capital by how much? I will just take 80,000. I multiply by 8. May reduce by how much? 640. Because they have been written down to how much? No. Now, with the capital reduced, to December, what do? We debit the ordinary what? Share capital. So I'll have the ordinary shares. I'll debit 600 and what? 40. Then I credit the capital reduction. Is that okay? 640. So venye nimesema hivyo ndo nafaa kufanya, which in this case, this is what I will do. Capital ordinary shares. I'm going to debit the capital reduction, which is of how much? 640,000. So then ordinary shares. This is 640,000. So now we continue on the same statement. Subsequently, every 5 shares of shillings 2 are consolidated into 1 share of shillings 10. Right now, let me just have it here. Let's see, the balance is that is having, the balance, is having 80,000. I multiply by how much? 2. Which is how much? In 160. Now, what do we mean when we talk about consolidation? Consolidation is whereby you are increasing the bar value while reducing. Nile tunaitanga to the reverse split. You are increasing the bar value while reducing the number of what? Number of shares. So generally, I can't impact on this amount. The amount will still be the same. The only thing that will change is the number of our shares, which in this case we are supposed to reduce them. Sawa. Then hii tunafaa kuiongeza ikuwe ngapi? 10 bob. Si hivyo ndo tumeambiwa? Sawa sawa. So this is what I mean. I will just simply say 80,000 I divide by 5. Sawa sawa. Itakuwa ngapi? Consolidate. Tukasema we reduce them. Inakuwa how many shares? 16. So hii itakuwa 16,000 shillings what? 10. Haikupea 160, inakupea hivyo. So consolidate shares. So right now is having how many shares? 16,000. Oh, so hiyo hainanga impact any of these. Are we together? Is what we call the share consolidation or what we call the reverse split. Wakisema the stock split is where now you are increasing the number of shares as you reduce the value. But generally the capital haifai kuchange. Ni sawa? Are we together? Tuendelee. On that, the existing shareholders are to subscribe to a rights issue of how much? Existing shareholders are to subscribe to rights issues of how much? We've been given there that the rights issues here were of shillings 10 for shillings 10 ordinary shares at a value for every share held after the proposed what? Reduction and consolidation. Sawa sawa. So right now he's having how many shares? Hapa anapewa 1 yenye ako nayo, anapewa 2 rights issue shares. Ni sawa. Unaulizwa what about 16? Atapata how many shares? I'm on the rights issues. Ni sawa. Atapata how much? It will be how much? It will be 32,000. This is at how much? 10, which is 20,000. This is now what we call in the rights issue. So when you issue rights issue, you are issuing shares to the existing shareholders at a price that is slightly below the value. Sawa sawa. So generally, when you issue the shareholders, you watalipa, si umereceive, si itakuwa cash. Therefore, here I will just debit the cash and bank account with how much? 320, right? When you issue the shares, since you increase the ordinary shares, I will have the ordinary what? Shares with 300 and is that okay? So I will come here. I will have the rights. Let me just write rights issues. Zilitoka wapi? So 320. So ni kukwambia already in the bank amepata 320. He is now having money 320. We continue. Number 3. A major supplier agreed to exchange a debt of 180 included in the trade receivable for 18 million ordinary shares of shillings 10. Sawa sawa. Huyu sasa tutafanya nini? Huyu ni supplier. These are trade payables. Reduce amount yake by doing what? Hii ni liability. Reduce amount yake by giving out what? I mean subscribing to the ordinary shares of the company. Sini sawa. So that means in this case, I will debit the trade payables account. Trade payables with the 100 and what? 80. Then see, akifanya hivyo ameongezea shares. Increase the ordinary shares with 100 and what? 80,000. Iko sawa? So nitakuja hapa Hapa acha niite the trade payables. This one, which is of 100 and what? 80,000. 180,000. Tuendelee. In full satisfaction of 687 million owing to the bank agrees to accept an immediate payment of 87 million. This was an overdraft. So what I will do, I will debit the bank overdraft account. Overdraft, which was over how much? If the amount in your wamelipa 87,000. Amelipa through what? I have to pay through cash and bank, which is 87,000. Hiyo ni kukwambia already now hii cash nilikuwa nayo hapa imereduce ngapi? 87. So ni sawa. Are we together? Because they have to accept an immediate payment of 87. Ndio sasa the other balance hiyo ndo tunaambiwa ikue is a loan. Ndio. Ambiwa the other balance as a loan carrying that interest. So tuendelee. Additional information number 5. Credit balance on the share premium. Accumulated losses, goodwill considered valueless and are to be written off. So tuanze na share premium. To write off the amount in the share premium, how would they be the capital what? Capital reduction. Yangapi? What was the, not capital. Sini share premium is an equity. Kama ni equity, nikitoa equity, I have to debit the what? Your share premium. So share premium ni yangapi? Ni ya 50,000. Sawa. You will credit now the capital reduction. Capital reduction ni yangapi? 50,000. So in this case, I love here the share premium. Yangapi? 50,000. So, endelea. The other one is goodwill. The accumulated losses. Said you debit the accumulated losses here. We debit the capital reduction. So this is now a loss. Then we'll credit the accumulated loss. So the accumulated loss was of how much? Accumulated loss was 230. 2,000 to 32,000. So I will have the accumulated loss. This is of 230. 232. Continue. We also had the goodwill. To write off goodwill, you debit the capital reduction. We credit the goodwill account. Capital reduction here, the goodwill was of 60,000. No, this will be 60. So goodwill written off. Goodwill write off 60,000. The goodwill write off 60,000. Is that okay? We continue. Asset listed below are to be restated to the following. So here we are looking for whether it's a revaluation gain or a revaluation loss. So we begin with the plant and machinery. From the trial balance there, it was how much? 326. It has been written downwards. So we know we are supposed to debit the what? Here you could debit the capital reduction. No. I will credit the plant and machinery. Plant and machinery ni ngapi? Plant and machinery, it was imekuwa reduced by how much? The difference? 2001. Tumalizie all the assets pamoja. We also have the inventory. Was it written down? So hapa nitakuja nikuwe na plant and machinery kwanza. Plant and machinery. This is 201,000. We have also inventory was written down. Inventories, they were written down by how much? Or they were revalued downwards by how much? From 216. So I will also have inventories here. This will be 200 and what? 10. Sawa. Tuendelee. The other one is the receivables. Zimekuwa written down by how much? 31,000. Here we'll also have the receivables. 31 receivables. 31,000. The receivables. That 1,000. The buildings, that is a revaluation gain. So get the total here. So to do what I'll debit here is for the capital reduction. Total ni ngapi? 448. That. Tuendelee. We also have the building that was a revaluation gain. That is a revaluation gain. So I'll debit the building. Buildings were revalued by how much? Buildings were revalued by how much? 15. So we'll credit the capital reduction. 50,000. So we can also do the same for buildings here. We have it here. Buildings. This is 50. Endelea. A group, there is no other information that is necessary. So you can now balance. Balance here. What is the total? It is 7 what? 740. What about this one? Also 740. Ordinary share. Total here is how much? So that we know the balance carried on. That in 1,300,000 is our balancing figure. $660. That's how equal to. So now we continue. So however, if in the exam, mimi chini ungechora tu ndio hii peke yake. Sawa. Hii tu ndio ungechora peke yake na utupee value. This is what we need. This is the only thing that I use in the statement of financial position. Sawa. Umjue chenye namaanisha. What's the name of the company? Tabo. This is Tabo Limited. We have a revised statement of financial position. Statement of financial position. This is as at when? As at. You want 1st January 20? 2010. So we'll begin with the non-current assets. Begin with the non-current assets. Non-current assets, we had first was on the intangible assets, the development cost. Development cost ni ngapi? Ni ngapi hapo? 40? 85,000. We also have the tangible buildings. Buildings have been written up by how much? Restated to 300 and 320. No. We also have the plant and machinery. Plant and machinery ni ngapi? 125,000. Don't have any other non-current assets. Now have the current assets. Current assets, we have the inventories. Inventories ni za ngapi? 210. The one is the trade receivables. They were written down to how much? 500,000. Then I will have the cash and bank balance. Now the cash and bank balance will be, he received a cash from the issue of the rights issues, no, of 320. But akalipa the bank overdraft 87. Inakupea ngapi? Yeah, 230. Then the total assets. Total asset 10, 3,000. Also go to equity and liabilities. So we'll have the ordinary share capital. The balancing figure was 6 what? Go to non-current liabilities. Now the balancing on the bank overdraft as per additional information number 4, ilikuwa tumeambiwa itakuwa a 12% loan, which was of 600,000. No. Then we go to current liabilities. Current liability, I have the trade payables. Trade payables zilikuwa za ngapi? The balance 390, 393. No. They converted 180 to ordinary shares. I will eliminate the 180. How much is it giving you? $180 hii yenye tuko hapa imeconvertiwa on additional information number 3. What they converted into ordinary shares. How much is it giving you? Hmm? 13. Get the total. What is the total? Hmm? 1070. That is how you are required. So ukiangalia the only information yenye nimetumia kwa hizi account ni tu, because I need to have the ordinary share capital count so that you get yourself the max 10 tu that way. Roman number 2. You are to write a report to the group of dissatisfied shareholders and advising them on whether they should accept or reject the what? The scheme of internal reorganization. So now what we do, we'll first consider if they accept this offer that they have been given. Angalia the cash offer on additional information number 8. Wamepewa cash offer of how much? So let me first know the per share. They will be getting how much? Per share. So they will be given 1120 million. Here we are using in thousands. So the first thing they will have to do, what are clear all their debts. So they will pay their current liabilities there. Wakona 3 what? 393. Then kuna 687,000. So this is what I will divide by the number of shares. Initially, we know they are having 80,000. So we divide by 80,000. How much each will be able to get per share? Kila mmoja tujue atapata ngapi per share. This is 0.5. Ndio. Hiyo ndo itakuwa the equivalent amount. Per share watakuwa na 0.5. But when you look at the company reconstruction, tumemaliza wakiwa na how many share? Per share itakuwa at how much? Shillings 10. Pamoja. So what the advice here should be, accept the scheme of the reorganization since it is having a higher value. Accept the scheme of reorganization. Accept the scheme of reorganization since it is having a higher value. Higher value. Watakuwa wanapata as a benefit per share. But when you look at them, they still have in shillings what? Shillings 10 per share. That is how in this case you are required to do on that. However, as I've said, hii nimefanya juu nilikuwa nataka mwelewe how we do the what? Journal entries. Hii ni swali hata ungefanya na less than 20 minutes. Because the only thing is hizi umeona ni kukopi na copy. Yes. Now you are expecting a question on internal reconstruction. Last sitting it was there on what we call the external. Nayo hawezi rudia mara 3. Amerudia mara 2 external reconstruction kama then it was in April it was in December 2024, not December, August 2024, the external reconstruction. Rudi tena April 2025 external reconstruction. Kiangalia hata huko exam ya December 20, was it? Yeah, December 2024, 2023, it was also an external reconstruction. Hii imekaa. Sawa. Yeah, and is always each and every sitting walete swali kama hii, company reconstruction. Yani inakuanga ya 20 marks. So ni vizuri some wilo time yenye tuko nayo it will not allow us we do more questions. But I want at your own time uangalie November 2020 question 4B. Check on that November 2020 4B. Well, I will come and do one more other question as I will be talking about suggesting the scheme of internal reconstruction. So you do on that. You'll also do on April 2023, question number 1. I'll just come and do one of the questions in the next class. Then we'll now get to what? The suggesting the scheme of what? Internal reconstruction, where you're now taught to suggest scheme of internal reconstruction. How do you do that? It was there only once. It has been tested only once in December 2023. Was question number 5. We see how we can suggest. Yani tumepewa hiyo scheme. In our case here, hapo tutakuwa sasa tunawasuggestia how they can do the what? Reorganization. So we'll just continue from there the next class.